Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. This week we're asking, why did the PSEI fall despite the rate cut? Why did the peso drop to 57? What move did RCR make to become the largest REIT in the country? But first, our market overview. The PSEI fell 0.9% to close at 6,339.77, with foreign net selling surging to 3.5 billion pesos, way up from just 112 million the week before. Now let's dive into why that happened. Here at home, the BSP cut rates last week by 25 basis points, bringing the key policy rate to 5.25%, its second straight cut. Governor Eli Remolona said there's room for one more cut this year, though inflation risks remain. Normally, the market goes up after a rate cut, but not this time for two reasons. Number one, oil prices jumping another 2.7% due to tensions in the Middle East. Number two, the peso weakening by 1.7%, closing past the 57 level at 57.17. Now, the peso weakened due to the continued flight to safe haven assets like the dollar and gold, triggered by escalating conflict between Israel and Iran. On top of that, the widening of the current account deficit to $4.25 billion in Q1 and the narrowing difference between the interest rates of the peso and the dollar caused by the BSP's rate cut and the US Fed's decision to hold most likely contributed to this. The smaller the gap, the less attractive it will be for foreigners to invest in the Philippines, weakening the peso. Remember, foreign investors account for about half of the daily turnover in the PSE. As mentioned earlier, while the BSP cut rates, the US Fed held rates steady, although they may cut rates twice later in 2025. Still, the Fed now sees a more stagflationary picture, meaning the economy is barely growing but prices are still rising. In its revised 2025 forecast, GDP slowed to 1.4% from 1.7%. Unemployment increased to 4.5% from 4.4%. Finally, inflation is now at 3% from 2.7%. It's also worth noting that US retail sales dropped 0.9% in May, showing weaker consumer demand. We're seeing signs of weaker economic growth in the US. But on the other hand, here at home, personal remittances rose 4.1% in April, a bright spot that will help local consumer spending stay resilient. For our stock spotlight today, RCR, the REIT arm of Robinsons Land, is doubling its mall footprint by acquiring 9 malls with a total gross leasable area, or GLA, of 324,000 square meters from Robinsons Land, worth 30.7 billion pesos in a property for share swap. After the transaction, RCR's new mall GLA will be 613,000 square meters, and mall share of portfolio will jump to 53.2%. Malls are currently more attractive than offices due to high vacancy risk in office leasing. Remember, there's an oversupply of offices right now, putting downward pressure on rents. RCR will issue 3.83 billion new shares at 8 peso to RLC, bringing its free float back down to the 33% minimum requirement. The swap is expected to be dividend accretive, meaning that each shareholder will get a higher dividend following the asset injection. This in turn will boost RCR's 6% dividend yield even higher, which is good news for investors. RCR's market capitalization will also increase to around 138 billion, making it the biggest listed REIT. So will we see RCR be included in the index? Only time will tell. Our economic outlook starts with the US striking 3 Iranian nuclear sites. The question is, how will Iran respond to the US attacks? Earlier on, Iran pledged to retaliate if the US joined the Israeli assault. On the other hand, President Trump wants Iran to surrender. After the US bombed the nuclear sites, Trump said there will be either peace or there will be tragedy. This implies that if Iran doesn't surrender, the US will further escalate attacks. The uncertainty about what will happen next is expected to fuel a further increase in oil prices and a continuous flight to safe haven assets such as the dollar and gold. This is not good for the Philippine economy, the peso, and local stocks, especially companies that are sensitive to a weak peso like GT Capital, and rising oil prices like Cebu Pacific. Another thing to watch out for is the performance of gaming companies Bloom and Plus, which made headlines very recently. Bloom for its e-gaming platform launch and Plus for its blockbuster 2024 and Q1 earnings. Both fell by 13.6% and 8.7% respectively after months of gains. Bloom in particular may be suffering from a sell the news pattern after launching its e-gaming platform earlier this June, since now it will have to do the heavy lifting of actually executing on its platform. That's all for this week. We're in a tricky environment. Rate cuts are coming, but geopolitical tensions and peso depreciation are clouding sentiment. Let's see what next week brings. If you found this market rundown helpful, don't forget to like, subscribe, and hit the bell so you're first to know what's moving the market. I'm Aprilitan. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.